my timing is not your timing. My timing is a longer term time horizon. I'm really trying to time this as a business cycle. So that's into the end of 2025. That's my time horizon. I don't trade around. All I do in sell-offs is add if my view hasn't changed. And I'll show you how my view hasn't changed.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Let's join Raoul Powell in a conversation about these topics and more.
So we start to see yen intervention. Now, the thing about the yen, as the Japanese also raise rates, the thing about the yen is that a lot of people borrow in the currency because it's cheap, and then they invest in other assets. It's called the funding trade. And that's all well and good, and it can deal with normal volatility. But once the Japanese started to intervene in the currency, it starts knocking people out of their positions. Those positions become less profitable. So what happens is they are forced to reduce risk. In banks, it's called VAR and hedge fund, which is value at risk. So if the currency moves a lot, their funding currency, or in fact, any major currencies, what they have a tendency to do is start having to liquidate other positions. That started knocking into the NASDAQ, riskier assets, as people start reducing the higher volatility positions, and it knocks all the way through the chain of all assets. That's where you get this correlation of one event when everything moves together when they weren't correlated before. It's because everybody's forced to puke risk at the same time. So the risk puking had started and then really started to gather steam. Now, for all of us, this is like, what the fuck are you doing? You're nuking my bags. I get it. But again, there's a bigger game to be played. The bigger game is they want liquidity into the system. And to do it, you're going to have a regime change, and that creates a macro spasm. Now, these macro spasms are not uncommon. You tend to get one every business cycle, particularly around regime changes. So, we saw one in 2018. That was at the end of the hiking regime. We saw then this spasm as the market essentially forced the Fed to pivot, the Powell pivot moment. But actually the most similar was 2016. Early 2016, the dollar had been so strong, it had pressurized global commodity markets. The Chinese were under huge pressure with their economy, as were the Europeans, and we needed to do something. Yet again, the Japanese started the ball rolling by starting to intervene in the currency markets. That pushed down the dollar, and a big unwind happened. Markets puked for a short period of time as this happened. But the Fed then stopped hiking. They was just starting the hiking cycle, and if you remember, they then stopped for an entire year. But others managed to massively inject liquidity because of the weaker dollar. And what did that do? Well, it set off markets after this spasm into a huge bull run. 2018, a huge bull run, because what you're allowing is the injection of liquidity, more cowbell. So that's where I think we are today. We're setting ourselves up for liquidity, but we need to digest the volatility of the currency move first.
Crypto analysts suggest waiting for Bitcoin to drop to the low $40,000 for the best bull market entry. Marcus Thielen of 10x Research recommends waiting for Bitcoin to fall into the low $40 zeros for an ideal entry before the next bull run. As a publication, Bitcoin is valued at $56,848, a 12.89% drop since July 31. Analysts like Timothy Peterson and David Gokhshtein foresee a potential drop to $40,000, offering prime buying opportunities. Thielen advises against holding due to expected near-term volatility, emphasizing the lack of high risk-reward ratios in Bitcoin and Ethereum compared to U.S. stock markets. Despite $17 billion in flows into spot Bitcoin ETFs since January, recent ETF outflows and Bitcoin's downtrend raise concerns. Thielen notes that investors might hesitate to buy the dip, with retail investors potentially cautious.
So what happened is this mix of the DXY, which is the dollar, and the 10-year bond yields, and Fed rate cuts all came from the Fed starting to suddenly say, well, the market's starting to realize the Fed were going to change course, and then the Fed changing course by saying they were probably going to cut at the next meeting. And that set this whole thing off. Now, there's a lot of rate cuts priced in. They weren't priced in before, but I think they're more correct in how they're pricing things in. Will it work exactly how the markets are suggesting? I don't know, but I think rates come down to 2.5% or lower in this cycle. If you remember, the everything code needs low rates because you have to refi the $10 trillion of debt. So you need low rates to do that and liquidity to pay the interest payments on the prior cycle's debt, which is why the everything code is so important in this and why we keep repeating the same old cycle. It's because it's about paying the refinancing costs of the debt, and we're deep into the refi cycle. So I've been explaining for a while, the Fed and all the central banks need low rates. The Treasury needs liquidity within which to roll that and also to monetize the previous interest payments. That monetization of interest payments is what drives the liquidity cycle and the debasement cycle, which drives up assets. Also, as the business cycle bottoms, people have more money, businesses have more money, it gets reinvested, people invest more, and that builds on a cycle. Things like emerging markets do well when the dollar weakens. So therefore, profits get reinvested in the system, and the virtuous cycle of macro summer and macro fall play out. And that should play out all the way into the end of 2025. Okay, financial conditions are really important. So financial conditions lead the ISM, the business cycle, by 9 months. So we've been ripping higher in financial conditions for a while now, with some pauses en route. If you look at the current pause in the ISM, it matches the pause we had in financial conditions 9 months ago. But now it's been going higher. This financial conditions index doesn't take into account the fall in yields that happened this morning and the fall in the dollar. So by the end of the week, if those stick, we should see this even higher. But overall, as the dollar weakens and rates come down, financial conditions will continue to ease, and that will continue to lead the business cycle 9 months from now. Also, what the financial conditions is really gives you a composite of all the countries with their leading indicators rising. So it leads somewhat, and it's telling you that economic recovery is on the cards. And that's what these OECD composite leading indicators are. They're showing you that global economy is recovering and financial conditions is what causes it to recover, which is important because that's where profits come from. That's where earnings come from in corporations. That's where household earnings comes from. That's where investment comes from. Money goes into the stock market. All of those things are driven by this business cycle. Okay, when we look at the global liquidity, you hear about me talk about global liquidity a lot. Well, you see, financial conditions lead it. The central banks pretty much act on the financial conditions. So there's a 5-month lead. So you can see financial conditions on this weekly basis have been chopping around a bit, but are moving higher. And that should mean global liquidity should follow. And financial conditions should be breaking out once the numbers are updated. And that will have the liquidity also rising. So liquidity is the prerequisite for markets to rise. And so that is all coming into play. And now we've been given the reason. You know, people say, well, we need something to break. Well, guess what? We had it today. So we've got that. So global liquidity, when I look at it, global liquidity is about to break out too. I know you might think of this as a sin, doing technical analysis on the global liquidity index, but hey, it just shows that the sideways contraction in global liquidity and the likelihood that it plays out, driven by the US, driven by Japan, driven by China, and also eventually driven by the Europeans and everybody else, because they all need to refi their debts. That's the big game.
Bitcoin whales accumulate 404,448 BTC worth $23 billion in the past 30 days, signaling a potential market rally. Permanent holders, often referred to as whales, have accumulated 404,448 BTC valued at $23 billion in the past 30 days. This significant accumulation suggests a deliberate effort by whales to consolidate holdings, indicating a strong shift in market sentiment. CryptoCoin CEO Kai-Hung Ju predicts that major entities, including financial institutions and governments, might announce Bitcoin acquisitions by Q3 2024, fueling further speculation. The surge in accumulation mirrors past patterns, where similar activity led to substantial price rallies, such as the late 2020 accumulation followed by the 2021 price surge. The recent spike in whale activity highlights the significant role of long-term holders in influencing overall market dynamics, reinforcing the trend of accumulation preceding bullish market phases. Michael Saylor likens a U.S. strategic Bitcoin reserve to the historic Louisiana Purchase, urging the U.S. to accumulate BTC. Michael Saylor, co-founder of MicroStrategy, advocates for the U.S. Treasury to acquire 1 million BTC, nearly 5% of the total supply, as a strategic reserve. He supports Wyoming Senator Cynthia Lummis' proposed BIT-Sewine Act. Saylor compares this potential Bitcoin acquisition to the Louisiana Purchase of 1803, which significantly expanded U.S. territory. He believes Bitcoin is a valuable digital property for the future. During a keynote at Bitcoin 2024, Saylor predicted Bitcoin's price would reach approximately $13 million per coin by 2045, highlighting his long-term bullish stance. The Bitcoin 2024 conference saw support from U.S. presidential candidates, governors, senators, and House members, marking an inflection point for Bitcoin's acceptance among national leaders. Despite a recent $510 billion market capitalization drop, long-term investors like BlackRock's Shares Bitcoin Trust, IBIT, showed resilience with zero net outflows on August 5. If you've been with us so far, a big thank you. Don't forget to subscribe for free to BitcoinZella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.